What's going on, everyone, and welcome back to another episode of Mortgage Heroes Podcast. I'm Brian.
I'm Will.
And today is just us two, no Andy, and we got a lot to just cover and let you guys know what's happening on the front lines down in the trenches.
That's right. Let's go. So one of the things that we wanted to talk about today there's so many misconceptions is down payment assistance programs, So we figure we do a lot of down payment, but not assistance. We just do a lot of no down payment because we work with a lot of veterans and active servicemen and women. Thank you again for your service. But, one of the things that we wanted to do is we also work with a lot of civilians. And one of the things they ask is, down payment assistance. And so I know a while back, we wouldn't do a lot of these because we just thought it was just, I don't know if it's worth it and all that. But, in life, Brian, it's like, tell me who you hang out with so I can tell you who you are. Mm-hmm. So we surround ourselves with very successful investors that they have this stuff dialed in. And I became a believer. I haven't done a down payment assistance program. I don't even remember when, Brian. I really don't remember. And so we just got one done. And I'm like, really? It was that simple?
Yeah.
Like, what happened to this time that it takes 45, 60 days, or it's like such a big issue? So, I figure, why don't we talk about that stuff? Why don't we just get more insight and we plant more of these seeds of people wanting to get into a down payment and really feeling like, you know what, I can do this. Now that I've heard this information, it makes perfect sense.
No, 100% and totally. I feel that before there was just a lot of uncertainty, or there was a lot of different types of things that didn't allow you to get approved for the right amount. You'd have to fall into a perfect box. If you didn't have the perfect credit, debt to income ratio, you wouldn't really be able to reap the benefits of the down payment assistance program.
That's it.
At least here in California, with the price ranges being so high. But recently, since being connected to this new investor that we're working with, it seems like they have, a very ramped up program that really allows you to actually use as much as your income as possible. There's very minimal guidelines or, obstacles to really get by. And it seems like it's just a very straightforward, regular loan. The kicker is you actually get the down payment assistance.
That's right. So, without further ado, let's get into it. What is down payment assistance? Down payment assistance is just defined as the simple terms are there's different types. There's some down payment assistance that are their grants. Mm-hmm. There's a lot of investors like Washington. I was going to say Washington.
Oh, you gave away your experience.
But we got like Chase Bank, Bank of America. They put this money together so that they can give grants to certain communities, so they can go out there and get these down payment assistance. There's also forgivable loans, which means we'll give you the down payment, and it'll be forgiven in a certain amount of term of paying certain mortgages. Sometimes it takes over 60 payments. And that'll be forgivable. There's other programs that are different. There's also repayable. In my case, we're doing a repayable down payment assistance, and it's for FHA through the Fair Housing Administration. And so it's 3.5% down. And it is it is repayable. And what they mean by that, it's not repayable in a monthly basis. It's repayable when you're going to either refinance out of the loan or you sell your home. At that point in time, you make that repayment.
Oh, awesome. So it sounds like you're able to, get the assistance. You don't have to pay a second mortgage or a second lien on the property.
Correct.
It's all inside that one loan. And then at the time that you do decide to either refinance or sell the house, you basically, come full circle with that payment through the proceeds of your, refinance or purchase.
That's
or
correct.
Sell, I'm sorry.
Yeah, that's correct. So in this case, it's going to be repayable and forgivable. When it's forgivable, you have no skin in the game. Mm-hmm. And that's what people don't understand. When you have no skin in the game, the interest rate's going to be much higher.
Yeah.
And so in our case, because it is repayable, we're 1 full % lower than a forgivable one.
Okay.
So in this case, because of our debt to income ratios, we were able to it was better off for us to come up with a repayable.
Nice. And what would you say some of the borrowers that could most benefit for this type of program right now are?
Well, the great thing about that is, first-time home buyers, there's going to be families who just have no down payment. That's going to benefit them. And there's a lot of people that actually, they're not first-time home buyers. They just probably sold their home. They're relocating something. They probably didn't have as much equity as some people would. Mm-hmm. And so now they're looking for some down payment assistance. So it doesn't always have to be a first-time home buyer.
Nice.
You know, it could be for military, it could be for nurses, it could be just for anyone. So
Nice.
anybody could benefit from this.
That's really cool because I remember in the past with other types of programs, there was very minimal, like, flexibility about who can afford it. You know, your income was way too high, you couldn't get it. One of the ways I feel that this is very helpful right now is for people that have the minimum down payment, but their monthly payment is going to be a little bit higher, and they want to maybe, bridge the gap, come in with a little bit of higher payment, maybe, 5%, they have half, they utilize the other half. Have you seen that, or is that something that can be done? Can you add your personal funds as well and then also take the down payment assistance?
Absolutely. There's different ones. You could do down payment assistance, and you could also have assistance with closing costs.
Nice.
Or in our case, the seller provided a seller credit of $20,000
Wow.
for a $500,000 purchase. And so it made more sense to us go with the repayable because the property, since it's like a good friend, they're like, hey, we want them to take advantage of this opportunity. The value of the home is actually around $680,000.
Okay.
And
So they're getting a good deal on it.
absolutely. So the Guzman family, they're like, Will, what should we do? Well, would you rather go with the higher interest rate or a lower one? Lower one. And here's the reason. They already gave you $20,000 towards your closing costs, which is great. Down the line, we're thinking of repaying that because we're going to refinance. Possibly get out of FHA, go into conventional, increase their credit scores. So it's going to be a greater benefit for them because then they get rid of that MI because of the value that's already there.
Yep.
And so there's a plan of attack. So every situation is going to be different, but absolutely, you can come with your own funds. If they had their own down payment, they certainly can go that route. But a lot of times when these properties, they're a little dilapidated, so it's good for them to just hold on to their money and be able to go in there and not incur new debt. So it's like I tell them, why don't we just go with this? We're going to refinance down the line, utilize those funds, the down payment, to either paint or make some repairs and just get it to where you're comfortable with the home.
Nice. It sounds like, it helps you get into the house. You don't have to break the bank. You could budget accordingly. And then down the line, you can easily start making those repairs, start pivoting in the ways that you want to. But I feel this is really good for the people that, want to get into a house. They have the good income, but maybe the debts are a little bit tight on the debt to income ratio. The good thing about FHA is that it allows you to use more of your debt to income ratio opposed to a conventional loan where you're capped out at 50%. Yeah. So, you get a little bit more bang for your buck being able to go this route, and they give you the down payment, which is great. And I think one of the biggest things is that now there's a lot more exit strategies that aren't really costing the seller on the back end, thousands of dollars, or they're getting misled into a program that they're going to have to pay a different amount. Now you know exactly what you're getting yourself into, and it allows people to be able to be freely and have more confidence when shopping.
No, absolutely. And why do down payment assistance matter right now? A lot of people, there's a myth that they are required to put 20% down, and that's just not even true.
Yeah.
And with home prices increasing the cost of living, well, this type of program enables them to get into a property, just like our veterans. There's no down payment. It helps them get in, and they can figure things out as they move forward. The beauty about the VA and this is there's no mortgage insurance. Veterans have that. And then, most buyers, believe it or not, Brian, they sit on the fence because I don't have a down payment. I'm not a veteran. I'm not I'm not in the military. So where do I come with this? And that's mostly what hinders buyer's decision, is not realizing that there is programs out there. And again, that's why we're talking about this, so that we can bring them in to our world to help them understand there is programs, there is a solution for you.
Yeah, and I like that you mentioned that because I know San Diego is one of the most expensive cities to live in. We know that, we live here, but I've learned that there's a lot of high income earners that are out there that are willing or able to be able to purchase, but just because they don't have that upfront down payment, they're basically consumed in being paying everything in debts monthly. Where if they're able to get the down payment on paper, they have the income to be able to qualify for that. It's just coming with that that down payment that I really think this could be leveraged to be able to bridge the gap to get into home ownership.
Absolutely. The number one barrier for first-time home buyers is down payment. So why not bridge that gap?
Yeah, and I love it, especially like right now in this present type market. I feel that the down payment assistance is, that could help you with your down payment. And then let's say closing costs, then that's the second obstacle that, you fall into. I feel right now in the present market, it's easier to get those costs either covered or minimized through seller credits, through negotiations, through lender credits. There's a lot of different ways to be able to minimize those. But I think the biggest one is the down payment. And if you have that down, then you have the confidence to be able to submit offers. And if you have a great agent and a great team behind you, they're going to help you strategize your offer so that you're asking for the credits to bridge that gap so that you don't have to come out of pocket. And a lot of people say down payment, oh yeah, no money out of pocket. That's not always the case. You still always have to be responsible for your closing costs. But what I'm saying is that there's ways to minimize those costs or get those out of the way through negotiations, and only if you have the right team behind you. And I stress that enough because we've worked with, experienced realtors, with, new realtors, with, middle season realtors. And the difference that makes a good realtor or not is the way that they negotiate and are able to convey the information over to their clients to let them know, this is why we need to be aggressive. This is why we have to move in this matter because we're trying to get this house, and I think this is the best strategy.
Absolutely, and vice versa. The lenders, right? There's there's seasoned lenders, and there's people like us too that we were so hyper focused on our VA because we understand that sometimes we miss these opportunities for others too. So we have to understand all our products so we can better serve our community.
Yeah, and I love that you bring that up because it's true. Once you understand more, we're able to pass that on to the clients and have the confidence, because at the end of the day, they really come to us so that we can give them the confidence to move forward and wanting to buy the property, right? They're not the finance expert, they're not the real estate experts, but they are willing to learn, listen, and be guided in the way that they want to go.
Yeah. Well, Brian, there is some common types of down payment assistance programs.
Nice. What do we got?
So obviously you have the local and state housing authorities. Like here in California, we have the CalFHA.
Yes.
And the CalFHA, essentially what that is we underwrite the file. And then once we underwrite the file, we have to send it to a third party to see what down payment assistance they're going to provide to our buyer. Right. And so they have to go through that qualifying. And obviously California has funds. They'll cover that stuff. But that's one of them. And then obviously the rest. Yeah.
So the national programs like the Chenoa Fund, the National Home Buyers Fund, we've actually done one through the Chenoa Fund. They follow similar to the guidelines for FHA. The only difference is that it is a borrower paid program, which means that your borrower does have to pay the closing costs or any lender fees. And I think that's where a lot of these programs lose their sexiness, where it's okay, I get the down payment, but then my closing costs also incur the compensation of whatever the lender or the broker they're working with is charging. But I feel that if you're able to get that covered, it's still a great program. But like Will said, they all are a little bit different. Credits will be different. Rates will be a little bit different as well, depending on what programs you get. But the employer assisted down payment, which is another one listed on the list, that one's simply something that's given through your employer. So depending on who you work with, a lot of these big corporations like defense contractors or hospitals, they offer certain programs in between their contracts with their workers. And I haven't myself worked with one of those myself, but through reading and things like that, we know that those are something that your private employer could offer.
And a lot of people don't know. You just have to ask your employer, hey, do you guys offer any type of down payment assistance? If I purchase my home through you guys, you'd be surprised, especially if we're working with big companies. A lot of times they just have a budget for that.
Yeah. And
it makes them look good. Instead of going to a nonprofit, right? You are the nonprofit. It is a tax write-off for them. It's a win-win all the way around.
Somewhere down the line, you paid into that.
That's it. Exactly.
So might as well get some of those funds you helped
and
to build.
What it is you have to ask.
Yeah.
If you don't ask, you won't know. But if you're going out there and asking, you just never know what the answer may be. It may be a darn, oh yeah, of course we do. And well, who do you connect me with?
Bam, there you go. And I think that's a very good point that you bring up, because if you can ask, these companies, could offer grants, could offer those assistance programs. And if you don't ask, you're not going to get any of it. Yeah. So the worst thing that can happen is say, no, we don't offer it. But then now you can, base it off other programs that you do have available.
That's right.
But start with the low-hanging fruit.
Well, and then here's one of the other thing is qualifying for assistance, right? We do have to have a credit score.
Yes, of course.
The lowest it is like 580. Okay. Now, do we like really operating in the 580? If it's entirely necessary, then we'll go there. But when clients run credit and we see that their credit is that low, we're going to try to figure out a solution to increase their scores. Why is that? Because already if you're going through down payment assistance, you're going to get a higher rate already because there's no skin in the game for you. You're asking for help, and therefore, the more risk there is, the higher the rate's going to be. Now, if your credit scores are also low, that's another layer of risk to the investor, to the lender, and therefore, that's just going to require a higher interest rate, similar to when you purchase a vehicle.
Yeah.
The lower your credit score, the higher the interest rate for that vehicle. You know, and so those are things to be mindful. So if you are entertaining that you want to buy a home, first thing you got to start working on is, how do I improve my credit? Also with these programs, most of the time it depends. When you have a low credit score, even we're talking about 640 and below, sometimes what's called an AUS, which is an automated underwriting system, may not approve you. And if it doesn't approve you, it has to go through what's called a manual underwrite, depending on your debt to income ratios. And so then there's another layer of risk right there. And therefore now you can't have no 12 late payments. And I don't care what it is, a credit card, a rent, those are like no-nos. Can have no rent late payments. So you got to be careful with all that stuff. And therefore, if you have the higher credit scores, and if you did have a late, it doesn't matter because AUS will take it, and you're in a better position. So now you're going to acquire the better rates, and you're setting yourself up for success at that point.
No, I like how you broke it down. It's like, you know, just because you can get with the bare minimum entry, you're gonna get the worst terms, basically, flat out. But if you're able to work on your profile a little bit, get your credit up, then you have a better chance of getting yourself in a better deal. And a lot of what I've learned from working on doing an FHA under 580 is that you got to have compensating factors. So you got to have high income, you got to have money in the bank, and then if you do have those debts, like you better just have within certain amount of times, because if it's very recent, you're not gonna get it to go through. But the biggest thing is having high income. And we had a client where he was 580 below. We got to that 580 mark, and then we ran the AUS. Thankfully, they were self-employed. Both of them, filed Schedule E's, so we were able to use two of those incomes, virtually making over $150,000 a year. But their profile was definitely not something that you want to, approve for the regular route. But thankfully, they just had really high income. And that's just on a case-by-case basis. I'm not saying this is going to be for everybody. It's really, really dependent on your personal information, all the things that we're running on your application. So, it's best to have the highest credit score when you're applying at all times, because it's going to give you the best chances of approving for the amount that you want, and then, getting the loan that you like.
There's more options.
Yeah,
there's more opportunities in any of that.
So, what would you say is one of the biggest misconceptions when using DPA programs?
Yeah, I want to go there, Brian, but we also have to bring up the fact there is income limits when purchasing with these type of programs. There is some type of home, education that's needed with some type of programs, and they're very simple. They can take anywhere from 20 to 30 minutes. Some do have a cost, some don't. So again, it's, if we go back to the local and state authorities, if we go to the national programs, they all require a different type of education. In the transaction that we closed, because his credit score is above a 640, there's no education requirement.
Oh, got it. Okay.
So that's good to know right there, and why we're talking about credit scores and going through these qualifying assistance. The other thing is, you have to occupy the property as your primary residence. It's a must. You can't buy it for somebody else. That's just a no-no. It ain't gonna happen. The other thing is, what's cool about it is, what also qualifies is going to be single family residence. What's considered a single family residence nationwide is 1 to 4 units max. Anything above 4 units, it's considered commercial. So these down payment assistance will provide it for units 1 to 4 units. In addition to that, they'll also do manufactured homes. There's some areas here like Alpine that we work with, Spring Valley, they'll have some manufactured homes right there. So
one of the things that I like to mention when it comes to manufactured homes is, if you're on a land lease, meaning that you're paying for the spot, it's going to be very difficult to get any type of financing on there, whether you go FHA, convention, or VA. It needs to 100% be cemented to the foundation. You can't pick it up. You can't strap it down. It needs to be on the foundation. And I think that's something that a lot of people miss when they're out shopping and they see a house. Oh, it's great. Look at my payment. It's going to be so low. But then you start getting to the details and you see that, there's land.
Absolutely. Yeah. Especially when they have an HOA and you don't own the land, you don't want to invest in there. You want to invest into where you're going to own the land. It's yours. You can add other units if you wanted to, et cetera, Very common. So, yeah, you were saying now, sorry, we're kind of skipping that.
No.
Now going back to the myths and misconceptions of down payment assistance, Brian.
So yeah, one of the first ones that comes out is DPA is only for the poor. Well, that one's kind of silly because if you're poor, you probably shouldn't be buying a house, and you probably should be worried about other types of problems. DPA is a tool that you can leverage to help you get approved for the property that you're looking for if you don't have the cash up front. Yeah. Now, it doesn't mean that you don't have the income. You always have to have the income, but the down payment is simply for you to be able to get that money up front, and you're still going to pay it down the line somewhere, somehow. Yeah.
That's right. No, it's excellent. There's nothing wrong with leverage.
No.
Veterans aren't poor. They just have a benefit, and so their benefit is if you served, and you get this VA entitlement, you can use it and pay no money down. Well, this is also a benefit for people. And the other myth is most people think, oh, I have to be a first-time home buyer.
Nope.
Or
no.
There's none of that, right? And so there's opportunities for all of us. Even if you're not serving our country through the military, you're serving it by paying your taxes and paying your dues here. Mm-hmm. So why not be entitled to a down payment assistance program? You know? And so I think that, it is a myth that you have to be a first-time home buyer. The biggest myth that also we hear is the process is so slow.
That one's silly, but because I feel that it really comes down to who's on the file or who understands how to do that type of financing. And I think that could go for anything in lending. If you understand the type of financing that you're carrying out, it shouldn't take longer than the normal regular times unless something crazy happens in the file, something that you didn't foresee happen while you're in escrow. It's pretty straightforward, and you shouldn't take 45 to 60 days to be able to get this done.
Absolutely. But again, it's like I started in the beginning, right? Tell me who you hang out with so I can tell you who you are. It's like, tell me what investors or your net worth is your network is your net worth.
Yeah.
In this case, you got to find, because we're approved over 100 and some 50 lenders, we got to identify who's good at what they do, who's good at their craft, what's their wheelhouse. And then we just attack through that.
Yeah.
And so in our case, we were able to get a DPA in less than 21 days.
Yeah.
That's great. That's why I wanted to talk about this, because I'm like, all right, this is not bad. We had a 640. Income wasn't as freaking great as we thought it was. They didn't have much in reserves, and so it all went good. Mm-hmm. And so now I want to just spread the wealth of knowledge of what I learned and put it out there, let more people be intrigued by this. And hopefully it inspires them to, now they have that hope that I can get in. And these products are not just here in California, they're nationwide.
Yeah. And I think, just running this approval while you're shopping for houses won't hurt you, because of the fact that if you're able to get that down payment assistance, you've got the income, it all checks out for you, you're going to have an easier way maneuvering into the first couple of years of your mortgage, rather than forking out that money yourself. Maybe you have it, but if you do put it down, that's all you're literally like having to put down, and then you have to rebuild. At least with these programs, it allows you to be able to hedge some of your money, keep some of your money in your pocket for whatever repairs do come once you buy the house, because we know that things do come up. So I just feel that you should definitely leverage this the most that you can, and if it's something that you're able to approve for, run with it. Don't be ashamed to use it, because it's not just for first-time home buyers, not for people that are poor. It's a tool, and it's a financing strategy that can literally help you get into the house that you've been wanting to.
That's right. So again, let's just talk about the benefits.
Yeah. So some of the benefits right off the bat that come to mind is that you're coming less money out of pocket. Now, it doesn't mean that you're coming out no money out of pocket, but you're already off the bat canceling out the biggest expense, which is your down payment.
Absolutely. And it's a faster process, a faster path to home ownership.
Yeah.
So if you don't have it, don't feel like you have to have it now. As long as you have like $5,000, $8,000 in your bank account, that's used for reserves.
Yep.
We negotiate closing costs, or your agent will negotiate that. You get your down payment, you're good to go. So it's going to speed up that process for you.
Yeah. So I feel confident that if you're a decent income earner, you have, like Will said, 5,000 to 8,000 in your bank account, you are in the position to see what this looks like for you. And you should definitely move forward and see what the opportunities and options you have available, because just like your clients, they were able to leverage that down payment assistance, get into their house, and now they're going to be able to start building equity and then take that leap of faith next time around when they buy their next house.
Exactly. Yeah, exactly. And you know what? We talked about it earlier, but if you don't have that down payment, you don't have to put that down payment. That helps you for future repairs. That just helps you, for emergency, for furniture, whatever that may be.
Yeah,
so
100%.
I think it's a good thing.
100%. So, don't assume that you're priced out because you can't use your down payment assistance program. If you can approve for that, definitely use it as an option.
Absolutely.
And it's helping a lot of people now.
Yeah. Now, there's always pros and cons.
Yeah,
right?
always.
Some of the cons, we already discussed it earlier. You know, there is some drawbacks for this. Obviously, if you go with the forgivable down payment, the interest rate's going to be a lot higher because you really have no skin in the game. A repayable down payment is going to be a lesser interest rate because your intentions are to repay this at a certain amount of time. You know, although it is a silent second and there's no monthly payments, you are required to pay this back within 15 years, sometimes 20 years, you know, but most of the time, a proven statistic is that you're going to buy, sell, refinance within the first 4 to 7 years anyways. So there's nothing to worry about, especially if you bought yourself a home that already has some value like our clients did, right? They bought it for $500. The property is really worth $650. And the reason why they got that is because the person that's selling the property is a close friends of theirs, and they've been going to church together for a long time. So they're very blessed to be put themselves in this situation. You know?
Yeah, so I love how they're able to leverage that. And one last thing for me is depending on what program you use, make sure you just read the fine print. Sometimes down the line, if you do refinance earlier or sell before a certain period of time, there might be some penalties or some, you know, things that you might have to pay out. But, you know, nonetheless, if it makes sense, still run with it. And I know that you can, you know, adjust down the line.
Exactly. So on some of these, on the forgivable, you have to keep them like 60 months, like I said earlier. There's times where interest rates actually are much lower and you want to refinance right away. Well, you can't.
Yeah.
Otherwise, you have to repay that. And if you don't have much equity in there, you can't pay that back.
Nope.
So you're kind of held hostage, right? Because there has to be an extenuating circumstance in order for you to qualify. And how they make it, I think sometimes with these DPAs, they do make it difficult for it because it's like, what's an extenuating circumstance? Well, I lost my job. Well, then how do you want me to make my payment?
Yeah.
It has to go to that extent. That's pretty ridiculous, you know? So it just depends, again, the program that you choose.
Yeah, no.
So choose wisely.
Definitely. But like I said, you know, these programs are out there. So definitely think about this option when you're getting pre-approved.
Yeah, there you go. And just ask your lender, wherever you're at, ask your lender if they offer those programs, you know, what are the terms? And yeah, just go from there.
So switching subjects, one of the things that, you know, we've been hearing a lot and we've been doing ourselves a lot is fix and flips. And a lot of people have been, you know, building a big buzz around it, you know, investors trying to get in, new investors trying to break into the market. But one of the things I always hear from regular consumers and, you know, people that are trying to buy is, well, how can I buy a house to fix and keep?
Yeah.
Like, I'm just trying to like do my renovations. You know, I don't want to, you know, do some crazy things, but maybe the house does need a little TLC, some cosmetic work. And one of the things that we've found through, you know, searching through our resources, you know, trying to figure out solutions for our clients is that you're able to do renovation loans alongside your FHA financing, your VA financing, and your conventional financing as well. Hence the reason why I coined the term fix and keep, because you're able to now, you know, buy the property, add your renovations into the loan, and be able to basically, you know, quote unquote, remodel your property the way that you want it. Now, there is certain stipulations and there's certain things that you aren't able to do with you know, with this type of financing because of the reason that, you know, you're going to be living in it. So I have an example for a VA buyer here in Chula Vista that basically turned a house that, you know, needed some work into the house that he was looking to live in for the rest of his life. Carlos, he's a Navy veteran here in Chula Vista. He bought an outdated home with broken windows, plumbing issues, and an old kitchen. How many times have you seen that around here in Chula Vista in houses that you want?
Quite a bit.
So one of the things that his lender, advises that they should look into the VA renovation loan.
Yeah.
In his case, he was looking to get $45,000 in repairs. So what were the results of his transaction? He came in with zero down payment. He renovated his home in 5 months, and the appraised value after they were finished nearly came in $90,000 higher than what he purchased the property. One of the things I really like about this is that you're able to create equity instantly, but the accessibility behind it is literally just like doing a regular loan. Now, a lot of people think that you're going to need, you know, down payment or a crazy credit score. You're literally following the same VA guidelines that you do for a purchase loan. 620 credit plus will get you in the door. Some lenders might need a higher one, but 620 minimum could get you started. Now, with that being said, it doesn't mean that with a 620 you're going to get the full amount that you want. You're still following all the guidelines, all the risk thresholds to be able to get approved for that property. One of the biggest things is that it only is for single family homes, 1 to 4 units, nothing above that. So you can't utilize this to quote unquote invest. One of the things that I really liked about this is that, you're able to use it for your first time. A lot of people don't know how to use it. And I believe, we had an experience with a past client that was looking to use this program. Although it didn't work out the way that it wanted to, we were able to, learn a lot more how these things could actually be done.
No, absolutely. So what people need to pay attention with these products, and this is going to go for FHA, this is going to go for conventional, this is going to go for VA, is there's such a thing of a county loan limit. Mm-hmm. For instance, here in San Diego, our county loan limit is $1,077,550. So what that means is, for example, in my case, we bought a property that was $990,000, and they needed $230,000 in rehab costs because they just wanted to make it. This is ours, you know what I mean? And we're thinking we're going to build this and that. Unfortunately, they're not able to get. So what I had to do was, that ain't going to work. Your budget's too high. Okay, so what we do is we go $1,077,550 and you subtract the purchase price $990, and there's also fees that are incurred behind that when it comes in renovation. So the gap, there wasn't too much to do rehab work. If the rehab was $50,000, no problem. We can utilize that program. We can go with FHA, conventional, because the same rule applies with all of them. There's county loan limits on all. Okay, so in this case, that didn't work out. We had to close, at the $990. They did get a line of credit because they currently own a property, so they're going to get a line of credit of $250,000. So we just got a little creative. So we said, we're going to close with the regular FHA. Let's see what the appraisal comes back at. The appraisal came in value at $990 as is, which means no repairs necessary.
Yeah.
So that tells me the property is in habitable condition, so they could just go in there and not a problem. All the repairs and everything they wanted is just preference of what they wanted to enter a home to. And so my idea was, well, you already have a home that's you owe $500,000, it's worth 1.2, go get a line of credit. And they already had one with Navy Fed, so $50,000. I just told them, just increase it. And they'll give it to you because you have plenty of equity in there. So now what they're going to do is as soon as they got in, they got approved for the line of credit, they're repairing their property. And then when rates go down in 7-8 months, we'll be able to do a VA cash out up to 100%, no problem. So now we pay off that second lien, and that's how we're able to do that. Okay. Which worked out great. But in this program here, the great thing is, you already saw what we did with that other client that purchased at $700,000 and needed $100,000. He's under the county loan limit, so it was easy to do. Yes, the interest rate's also a little higher because you're going with no money and then no money down, and we're also giving you the rehab cost where you're going to work it out in draws. Yeah, and so it's just a win-win situation. So a lot of people that are actually also, this is not just for purchases, and that's one of the myths. Well, I am doing a purchase. This also applies to refinances. So if you currently own a home and it's almost free and clear, and you're like, I have the desire of building an ADU. Yeah. Well, guess what? FHA or conventional will allow for that. You just have to qualify, as far as your income. And the cool thing about it is, once you have your permits and plans together, if it's a 2-bed or 3-bed, we're going to be able to use those rents to help you offset that payment also. So that's going to help qualify, which is just a great, a great way to leverage your current property or purchase a property if you're looking to do some type of rehab.
Yeah, I want to stay on that thread of, if you own a property and it's almost paid, I feel like a lot of people with the whole ADU gold rush here in San Diego and California are trying to figure out ways to finance those ADUs. And, if it's an investment property, you have a little bit more lukrativity in being able to get a hard money loan, ground up construction financing. But when it comes to primary, I feel like it's, you have to get creative. Like you just mentioned, you have to, pull from over here, find it out over here. And I think that this tool allows, homeowners to finally build that ADU or, offset that monthly mortgage expense by investing in their own property.
Absolutely. How do you build generational wealth?
Through real estate.
Exactly. Well, there's other forms, but you build it with what you have. You focus on what you have. If you already have a property and you already have the land to build, why not create a legacy behind that? How many of us have kids that are going to college and we know things are getting expensive out there? But if we have this property that's almost paid off and we can convert either a garage to a 1-bedroom, 1-bath, that's 400 square feet, because usually garages are 20 by 20. Yeah. So that's going to give you your 400 square feet right there. And what people people don't realize is when you do an appraisal, okay, the appraiser is just going to give you maybe $20,000-$30,000 of value for that. And I think I'm going high on this, whereas if you really take a look at this and you convert that garage and say you spend $80,000 and $90,000 to convert, maybe $100,000 with permits and everything, right? You just added 400 square feet additionally to your home, and then you made it a 1-bedroom, 1-bath with its own kitchen and everything, own entryway. You just added more value to your property. So if the property value in the area, your square feet is selling for $500 a square feet, you just
raise the bar.
That's it, So you just gave yourself right there quite a substantial amount of equity built right there. And then if you needed to rent it, well, in some areas here, I see some of our clients who are veterans, and they've done that to their garage. They're renting anywhere from $2,000 to $2,400.
Yeah, and I mean, and they're looking like just our past client Caban. He's going to be doing the renovation in his garage. Perfect example. He's looking to exit his property, utilize this property here in San Diego to then jump to his forever property back where he's from.
That's
and I
right.
think that's the perfect play, that if you're a VA or you just own a property here in San Diego, before you think about selling it, think about investing in it, because it's going to put you in a better position down the line. Like Will said, it's money that's going to be residually coming in, and down the line, you're able to bridge that into, a different investment, but you have something that's working for you while you're away.
The beauty about that, Brian, I'm glad you brought that up, because he served our country. I don't remember how many years, but enough to retire.
Yes.
So he has retirement. He's 100% disabled. He is now utilizing a property that he purchased back in 2014, 15, I want to say. He took a line of credit to build that, this additional bedroom, 1-bath that he's going to rent out for $2,000. And his payment's really low already because we refinanced him to a low interest rate when the rates were low. And so now he's got 2 streams of income right there, because he's going to rent out the front unit, 3-bedroom, 2-bath. 3-bedroom, 1-bath, adding another bath right there. That's going to be an easy rental for $3,600. And then his payment with the line of credit is like $2,600.
Yeah, it was like...
So automatically, he's just making more money on that. And that's the beauty. That's how you're building generational wealth, because you're adding to what you already have and you're focused on that, We're brought up to be such hunters that we're always thinking, where's the other deal, that we forget about the things we already have. So I'm very proud of them, and I'm proud that we have all these options. So I tell everybody, just go and talk to your lender, whatever state you're in. The lucky thing is we're in 47 states.
So talk to somebody.
Ask us questions, do whatever you need to do. But there is a VA, an FHA, conventional. There's, different products to be offered.
Yeah, and I like how you said that, I think you have to also be a strong-minded person to be able to pull this off. But at the same time, it's not as difficult as people make it out to be. As long as you have the right guidance from the right people and you just have the ability to want to do it, I think that's where it all starts. And there, everything's going to come together. As long as you align yourself with the right people, you have the right team behind you, you're going to be able to get this done. And I think down the line, it's going to be something that you tell a lot of other people. Say, hey, dude, you should have done this with your property when you had it. But it's not too late. And I think that, people don't act until they see somebody that's close to them do it. And they're like, hey, well, how'd you get into that? So I really feel that if that's something you want to do, it all starts by just reaching out, doing some research online. ChatGPT will definitely get you started, and then you could cross-verify with, your favorite lender or professional real estate person that you talk to.
Yeah, I'm glad that you bring that, right? Trust and verify is one of the key words that I've heard.
Yeah, trust and verify.
But, Fannie Mae has it. It's the home style. You guys just could Google that, and it'll give you good information. If you're looking to build a pool, you're looking to build an ADU, they'll help you with that. You just renovation, whatever else you need. If you have plenty of equity, that's where we suggest you take that path and utilize what you have. If you're thinking your home's going to be even longer term than what you're already currently in.
Yeah, I think there's a lot of opportunities for people that own houses right now. It's just, figuring out what they want to do.
Exactly. So hopefully, hopefully we've answered a lot of questions already and taken a lot of doubts out of the equation and inspire some of the people, because that's what we're here to do, is just give enough information to empower people and inspire.
So that's what I was going to go back to when you said, we're so geared towards being in the hunter mentality that we forget that farmers have food throughout the seasons.
A bug's life.
You know what I mean? So, when you said that, it's so true. If you're planting your seeds and, you're watering them, you're connecting with the right people, asking the right questions, that's all planting seeds, instead of, once you're done, you're like, what am I going to do? I have to move quickly. You're hunting. You're trying to look for the next thing to happen. And when in reality, you could have prepped all season for that time that you knew you're going to need, to harvest the stuff that you need.
What does that prep look like? Prep on your credit scores.
Yes.
Take care of that credit. Whatever you do, more options open up for people with better credit. It really does. It's going to be leverage at its best. And so those are the things that I know. I teach my clients. I teach my children. Everything's about credit. And so leverage, we get so many people that want to put so much money down. I'm like, why? Why do you want to do that? There's other investment vehicles that you can invest that difference in putting it something else, than going and trying to pay a property off that your interest rate's going to be 6.5. Well, what if you can put another 100,000 into an investment vehicle that's giving you a 10, 15, 20% return?
Now you're hedging against it.
That's it, and what people don't identify is like the two-car garage. Convert that thing and do the math. Do your cash on cash. If it's costing you $90,000 to do, but you're getting rent of $2,000, right? That's $24,000. Divide that by the $90,000 that it cost you. I can assure you, your rate of return on your investment, your cash on cash, is going to be in the high 20s. Mid to high 20s. It's just what it is.
And you'll know exactly when you break even and then you start profiting. And you'd be surprised how quickly it is after you start just consistently seeing it come in. And then you're almost finished with your project. And what did you say the other day? I'm getting addicted to wanting to try.
That's it.
I want to do another one. And I think that's the key of it all, that you're going to try this. You're going to say, I want to do this more. Right. It's wow. I wish I would have started earlier. Or, you know what? This was it for me. I am not a project manager. I'm okay with that. I'm going to take my money and invest it elsewhere.
But
that's
again,
okay.
we go, I'm not a project manager, because you see me. I go to the project once every week, maybe every other week.
Yeah.
You know what I mean? I just try to find the tools to understand what they're doing and see what they're doing. And it's all through WhatsApp.
Yeah.
Take me pictures. So you don't have to be a contractor. You don't have to be a project manager. There's different ways how you can enjoy the project without getting discouraged.
I like that.
And so my encouragement is like, leverage what you have. Go out there and ask the right people so that they can take you to the right place.
I like that. Well, if there's anything that we can end off is, how do you build wealth? Generational wealth is, you work with what you have.
You work with what you have. And it's scary.
It is.
It's scary. I still get scared. I have to extend my loan that, I got for 12 months. So hindsight, I should have done 18 months.
Yeah.
So it's like little things like that, we get forgetful. Oh yeah, I'm going to take the contractor's, word, and they're going to get it done in 8 months, 10 months. So I'm going to give 10 months. Now it's 12 months. Now I have to pay a penalty because these things happen. These are the real rewards. But if you don't risk, you'll never know what the reward's going to be.
So I think we covered a lot in this one. I really hope we build curiosity. I hope you guys have some questions. Reach out to reach out to us, your guided professional that you like to talk to. But more than anything, start building a plan, start seeing what options you have out there, and really just take that leap of faith and take action. Will, is there anything you want to say before we go?
I just want to say, I think this is great information, and this is really what's trending right now in our market here in California, and we wanted to bring it to you guys and share with you. This is what fix and flip investors are doing. I mean, how many times do we see a DIY, people just trying to get it all done, and and they just don't know the know-how. This is the know-how right here. It's all about the money. Where do you get it, and how do you really see what the actual after repair value is going to be, after you do the work. So
I love that. So anybody out there that, wants to learn more about fix and keep, how to get the, renovation loan, or how to leverage the down payment assistance, please make sure you reach out, ask us any questions. And other than that, make sure you subscribe, you turn on notifications so that you never miss a show that drops from our channel. Thank you so much, and we'll see you on the next one.
Thank you. See ya.
If you enjoyed this video and you want more of our content, subscribe here. And if you'd like to watch another video right now, click here.